As far as old tax regime is concerned, there are practically no changes. For the new tax regime, the slabs have been widened. Earlier, you had to pay 0% tax on your income up to 3 lakh rupees. Now, this limit has been increased to 4 lakhs. And further, the slabs have been widened. You have to pay 5% tax on your income from 4 lakhs to 8 lakhs, 10% tax on your income from 8 lakhs to 12 lakhs, 15% tax on your income from 12 lakhs to 16 lakhs, 20% tax from 16 lakhs to 20 lakhs, 25% from 20 lakhs to 24 lakhs, and 30% beyond that. Actually, what happens is there's a concept of rebate. So, if you make up to 12 lakh rupees of income, all the income tax that you are supposed to pay gets reduced by this rebate that is given under Section 87A. You can simply opt for the new tax regime because you have to pay no tax on income up to 12 lakh rupees. While if you talk about the old tax regime on the same income level, you will fall under the 30% tax slab already. So you need to have 7 lakh rupees worth of deductions in the old tax regime only, then you will be able to break even with this level of income. No tax. You did not have to pay tax earlier as well, neither do you have to pay tax now, because even at a 7.2 lakh rupees per annum of income, you used to get standard deduction earlier in the new tax regime. Earlier, under the new tax regime, you had to pay 52,780 rupees of tax after cess and after considering standard deduction. Now you pay no tax because, as you already know, there's no tax on income up to 12 lakh rupees, and this limit gets increased if you're salaried to 12.75 lakh rupees due to standard deduction that salaried employees get. After standard deduction, this income gets reduced to 9.25 lakh rupees of taxable income. Under the new tax regime, you had to pay 2.78 lakh worth of taxes on this income level, while after the revised slab rates, you have to pay just 2.08 lakh rupees of taxes on this income. So this is an effective reduction in taxes of worth rupees 70,000 or 25% lesser than what you were paying earlier. For the new tax regime, no, there are no changes as far as standard deduction is concerned. You were getting 75,000 worth rupees of standard deduction from your salaried income earlier, and now also you will get that same level of standard deduction. Yes, so the senior citizens had to file tax returns on claiming TDS that was deducted on their bank deposits earlier if their interest income from one bank exceeded 50,000 rupees in a year. Now this limit has been increased to 1 lakh, so banks won't be having to deduct TDS when they're remitting interest income to senior citizens if that interest income is up to 1 lakh rupees. There's no tax deduction as such, but definitely this improves the immediate cash flow position for senior citizens who are getting up to 1 lakh rupees of fixed interest income from these banks. The answer is no. There has been no revision as far as Section 80C is concerned. 80C is a part of the old tax regime, and typically, as far as the behavior of the government is concerned, they are phasing out the old tax regime, which was very complex, and they have made the new tax regime very lucrative for people to opt. One is the senior citizen threshold limit on interest income that I already told you, and the other one is the TDS on rent. So if a business is paying you rent of more than 20,000 a month or 2.4 lakhs in a year, then they were supposed to deduct TDS on the rent that they pay you. Now this limit has been increased to 50,000 a month or 6 lakhs in a year. So this helps a lot of people who are getting income from businesses by a way of renting out their properties to such businesses. While this affects a very small section of people, but for whom it impacts, the benefits are same as in the case of senior citizens. The answer is no. So, income from capital gains from sale of stocks or mutual funds which are listed on recognized stock exchanges in India is taxed at a special rate. So, you won't get any rebate on incomes like these. So, this is interesting. See, if typically you have an empty vacant property which you are not able to rent out for whatever reason, you will declare zero taxable income on that, but that's not how the Income Tax Act works. So even if there is a vacant property that you have to assume a rental value which is as per fair rules. Of course, you can't declare just ₹1 in a year and get done. You have to declare a fair rental value and pay taxes on that. Earlier, this was exempt if you had two houses, one which you could have self-occupied and second which you could not occupy because of reasons like, say, you were employed somewhere else or you were doing business somewhere else and you had to stay at a different location. So now if you're not able to let out this property for any reason whatsoever, you do not have to pay any taxes on assumed rental value. But mind you, this limit is applicable on only 2 properties in a year.